So I read this article this week
Mhm.
on Investors Business Daily, and it was talking about new investors charging into the stock market, mostly through the use of the Robinhood app. How you feel about that?
Um, Honestly, I think it's a good movement. I think it draws in a lot of young investors, but I feel like it makes everybody think that they can invest. I personally don't use Robinhood. I sit down with my laptop or my Surface Pro and I log into my account. I read the prospectus and I look at all the stats before I make my trades. But with Robinhood, I feel like it's easy access. Anyone can do it. Anyone feels like they're an investor, which is not a bad thing because it teaches you some of the basic principles. But I think Robinhood lacks some of the things like mutual funds, retirement plans, and I think some of the technical support is kind of it's not that great. So that's my take on it. What do you think?
Well, I think in terms of easy use, it's great for a beginner. I think it's a good stepping stone to really get your feet wet with investing. Because for most people, right,
Yeah.
investing is just intimidating. And I think that a lot of Robinhood users find investing as simple as logging into their Instagram accounts. So, I mean, I'm not mad at it. I love it. I mean, of course, the people who are going in thinking that they're going to be millionaires in a matter of weeks or months or a year, they're going to be disappointed. But if they stick through, have time in the market and keep their Robinhood app instead of for 1 year, 5 years, 10 years,
Yeah.
and they see that growth, it'll be a great thing overall because I think more Americans need to invest just in general.
No, I agree with that. But I feel like, okay, if you were to make 10K in gains, maybe you have a knack for it. Maybe you understand the process very well. So I feel like then you could upgrade to a brokerage account, whether it's through Capital One, Bank of America, Fidelity, Merrill Lynch, whatever it is. You've got that experience. You've gained enough knowledge behind it. So upgrade after 10,000 in gains, I believe.
Man, 10,000 in gains. How much are they investing?
I mean, it just depends. Some of those guys, if you look on Instagram, Instagram will tell you, which is probably all cap, right? It'll tell you, 726% rate of return. You know what I mean? I've seen that on some people's account, but I mean, it just depends on what's going on. You just never know.
I don't know. I think those guys are lying.
I think it's cap too.
They're using Photoshop or something because they're usually selling a program or ebook with it. So I don't trust those guys. I mean, I'm just gonna keep it a buck. I don't believe them.
I don't believe it either, man. I think, I mean, I don't know. I mean, if you take, $1,000 and you were to, actively invest over time, maybe within, 2 to 5 years, you could probably gain about 10K, and then that's enough experience for you to
Yeah, depending on
upgrade.
how much money you're putting up, 2 to 5 years, sure.
Yeah,
But a lot of these people are looking for a quick buck.
I definitely agree, and that's where I feel like that article comes into play, where it's like, what could go wrong? A lot of people could, they can invest. It's easy. There's easy access. It's on your phone, and you know, you could lose a lot by just simply trading on your phone. You see what I'm saying?
Okay, true. You could, but the good thing about Robinhood is if you have a basic beginner account,
Yep.
they only give you instant access to $1,000 at a time. So you're gonna have to wait a few days before you go make a $10,000 play.
Okay.
So that kind of protects you and shields you from self destruction. But like I always say, if you have a good ETF that you've researched
Hmm.
and that you believe in, or if you have a good strong company that you can believe is gonna stand the test of time, and I have to add a caveat to that, right? Because Blockbuster for the longest was a company we thought was gonna stand the test of time. But if you're doing your research and you're paying attention, you knew that Netflix was gonna go and take them out. So don't invest and forget it unless really don't do that. Period. The only time I kind of do that is with the S&P 500 ETF because I do believe that the American economy will stand the test of time overall. But yeah, man, Robinhood investing, I see no problems.
Yeah, and also to piggyback off of your point, Blockbuster, that was a good point. It's funny. But, maybe get into that technology lane. That's kind of where the world's going right now. I don't know if you saw Social Dilemma on Netflix, but that's the thing. So, where apps are taking advantage of people as users. And so a lot of people are kind of getting addicted to being on their phones or whatnot. But anyway, technology is definitely taking over, and that's a great way to make some gains off of technology.
I watched the Social Dilemma, or tried to watch it. I couldn't get into it. After about 10 to 15 minutes, I was bored.
Yeah, it's boring, but I feel like those guys they're really passionate about what they've created and what's going on after they created it. You know what I'm saying? And hearing from presidents and vice presidents of these large corporations, it's like, dang, maybe there is a problem. So, in the sense of using Robinhood and the Social Dilemma, maybe that's something else that can go wrong, causing the dependency on your phone. You feel what I'm saying?
Okay, uh, sure, but that takes the conversation to a whole nother place. But I agree with what you're saying.
Yeah.
So your premise is you believe in the tech industry because they're going to go out of their way to make you become addicted to their products.
1,000%.
But then there's a lot believe that there's a tech bubble and that all the tech companies are overvalued.
Yeah, but if you think about it, what else is there to do? There's definitely new companies like was it Snowflake?
That's a tech company.
Exactly. There's companies like your CRM, Salesforce. Apple's been around for years, and that's exactly where our society is headed. Healthcare, technology, real estate's always going to be around, and the most innovative sector, one that we haven't explored all the way, would be technology. We know real estate. We know buying, flipping houses, property's going away. So if anything, that's something that will be in the bubble. I don't think that technology.
You think real estate is going away? Clarify that.
Well, no, I don't think real estate's going away. I just feel like there's so much land that you can purchase. All you're doing is revisiting real estate. There's no innovation in real estate.
I disagree with that.
Okay.
Because you're right. There's only a finite amount of land, even though there's a lot of untapped land all across America and the world.
Sure.
But even look at what they're doing with land is different. Like where I live, they were just building up, these 3-story townhouses everywhere.
Okay.
Now they're building up apartments everywhere. Now Houston is starting to see more high rises being built. So they're trying to innovate with real estate. There's even a movement now in Los Angeles to allow high rises due to their shortage of housing, because their laws on the books won't allow for the building of high rises for whatever reason.
Yes, but it's the same premise, right? You buy some land, you build on that land, and you sell it to the consumer, right?
Yes.
Over and over and over and over. There's no innovation, like for instance in technology. There's artificial intelligence. There's machine learning. There's augmented reality. There's all these different sectors that we haven't tapped into within technology. It's a ever almost infinite things that you could do in technology at this point that we haven't gotten to. Just like what Elon Musk is trying to do with SpaceX. I mean,
he's really pushing the envelope, and even just with his cars, like Tesla Battery Day, like
yep.
A lot of people were interested in the new products he was releasing, but the information he released about the battery and about being able to make those batteries at half the cost, that's going to change the game. That's the kind of information that'll push things forward with going to completely green energy for vehicles. And that, just a shift in industry like that alone, is going to cost a lot of jobs and create a lot of jobs at the same time.
I agree. So it's just have to sharpen your tools, right? Every 10 years, you probably have to reinvent yourself, come up with something new.
Every 10 years, you may need to reassess your stock portfolio.
Every 10 years, you need to reassess you should probably reassess your stock portfolio more regular than that. But, you know what I'm saying? Yeah. Definitely don't let it sit for 10 years.
Yeah, but the people who've let their Apple stock sit for 10 years are wildly rich.
Correct. You're right.
But
Microsoft,
Yeah, so nothing hurts by reassessing your portfolio. I mean, I reassess mine every 3 months ish.
Okay.
So,
Well, I think everyone should probably try to do a rebalance. So a rebalance is assessing your portfolio, checking the losses versus the wins, and maybe selling some of the losses and moving some of those into the gains. Also, reevaluating your portfolio, maybe bringing another stock, maybe bringing another ETF. So rebalance probably should happen if you have received a loss of either 5% to 10%. So I would definitely say rebalance, but based on your loss tolerance.
okay, I was about to fight you on that, but you said something I more or less agree with.
Okay.
Because there's this notion that you shouldn't be too heavy in one company,
Okay.
even if that company's winning for you. So what some people do is they'll have a company that, because of its performance, has grown to 30% of their portfolio, but they don't believe in giving a company any more than 5 or 10% of their portfolio. So they'll sell, 2/3 of that stock in their portfolio to balance it out.
Correct.
But they may very well be reinvesting that into a loser.
Well, that's when you take your reading glasses out, you get your Surface Pro, and you look at that prospectus, and you check your Morningstar rates, you check your betas, your P ratios, and things of that nature. And we'll explain that as the episodes go on, but I definitely think rebalancing is a major key.
But why sell a winner?
Just so you can buy the dips.
The dips on another company that might not be a winner?
No, I mean you could sell the gains on an Apple stock, right? You could lower your position on the Apple stock that you currently have, and then during an economic downturn, revisit that same stock and put those same gains back into it.
You have to apply perspective, though.
Okay.
So now somebody that had or just got into Apple this year, sure, you could apply that logic. But if it's somebody that's been at Apple 10 years, their position is far lower than whatever the dip was. So that wouldn't even make any sense for them. So I believe in taking new money and buying dips.
That's fair.
Whatever your monthly budget is for investing, which I think everybody should have a monthly budget for investing, no matter how low or high it is. And then they should take that money and buy the dips on companies that they have in their portfolio on days they're really red.
And what's the definition of that? There's a word for it, right?
Yeah.
Dollar cost averaging.
Oh, yeah.
Okay.
So dollar cost averaging is this. So a lot of times when people invest in a stock, they're like, well, I bought it at $100 and it's $150 now. I don't want to buy. But then next thing they know, they look and the stock is $175 and they end up never buying back into the stock. So what dollar cost averaging does is this. If you invest the same amount, on a timely schedule, whether it's bi-weekly, monthly, into that same stock, you will get the overall gains of the year from that stock. Right? And that way you're protected against when you buy too high. Then you also have the advantage of buying it when it's really low. But overall, when it smooths out, you're winning. Because on a good company, the graph, when you blow it out, by the year, is going up. Right? So a lot of times we get caught up in looking at the 1 week or 1 day graph where it's up and down, up and down.
Yeah.
But in reality, over the course of a year, if it's a good company, it goes like that.
Correct. But I feel like, okay, say for instance, you have a portfolio and you only want to make money off of that set amount. You don't want to include any new monies. How would you then maximize that account? You see what I'm saying? Say if you got 10K and that's all you have to play with. How can you make that 10K go to 20?
I see what you're saying.
Yeah.
And the only thing is, since that's not an investing strategy that I use, I can't really speak to that effectively.
Okay.
But again, because my strategy is invest in companies you believe in, invest new money monthly or bi-weekly. I say every paycheck, and then go from there. But you can expand on that. Give us the game on that.
No, I definitely agree. So the way you could set it up, you could have, say for instance, a robo advising account where you could do your dollar cost averaging with that account. So you pump in, whatever you want to deposit every week or every other week into that account. It goes into your portfolio tolerance where there be 90% stock, 10% bond, and then they dollar cost average for you, and they invest all that. So that could be a tool that you kind of get into the stock market off of deposits frequently. Now, with a separate account, you could do whatever you want, and this is to each its own, right? But if you had $10,000 and you were to invest your portfolio, you take wherever you are at this point in time, and then watch your gains. Take your gains, lower your positions, and then as the stock market then crashes, invest the gains that you have created back into the same stocks that you already invested in. Like, for instance, your ETFs. So that's what I've done with the portfolio I have currently, and I haven't increased or used any new monies with the Fidelity.
Okay.
See what I'm saying?
That's a lot of great information. And since we're talking about investing, that segues into this week's topic, and that's retirement.